What's going on, people? It's GBP baby. Welcome to another backtesting video. It's currently, what time is it? It's Friday the 7th of July at 1:21 a.m. So, late nights as per usual. But yeah, we're looking at Euro USD. We're looking at the week commencing the 11th of June. And yeah, hopefully we can get some good notations done and try and figure and potentially learn some stuff. I hope you guys enjoyed the last one. The last one was uncommented. If you guys don't mind that uncommented ones, I'm always happy to do more. This one is going to be commentated, maybe not as much as usual, but we'll see. So we have a breaking structure here. I am going to actually, although this is not in the kill zone, I am going to annotate pretty much everything. So we're going to be here for a while. It'll probably be a two-part series as per usual. But yeah, man, I hope everyone's well. And let's look at some price action. I do find this very relaxing, by the way, guys. I do suggest you guys should definitely do the same. And it's important, and it really does help you have a better understanding and view of price action. Like, look how we respect this fair value gap, and then we trade through it back and forth, and then we leave the range. Once we left the range, touch it, find support on top, and then trade on higher. And where do we find support? 50% off this wick. But yeah, it's all very fascinating. Right, so where were we? I just went to the toilet, guys, sorry. But then again, you guys aren't even going to notice that. I don't know why I'm telling you that. So yeah, the consequent encroachment of this. Consequent encroachments are something that I still don't fully understand, as much as ICT spoke about them. I don't understand them to the extent which I want to. Like, I understand that price trades to it and refers to it, but why? I guess it's a range, isn't it? Because I guess it's some kind of range. We've also got a fair value gap here. How does price treat that? Trade above it, trade through it one more time, let me push through it. What I've started to recognize is how gaps are formed when we take out highs, for example here. I see this as a breakaway gap. We push aggressively higher, and it's where there used to be a previous bearish order block. So I'm going to mark out this. That happens at the 50% level. You can't make this shit up. You can't make it up. You can't make it up. Definitely buy side liquidity resting up here. You can see how we create these relative equal highs, trade lower, find support on Sunday opening. This red line is Sunday opening and a fair value gap. So this would be a perfect buy. Why didn't it not come down here? Well, we have a breakaway gap, and you can see how we keep stepping. So our entry idea would be here. But I don't, this wick here, how that trades down here, I don't like that. I do not like that. But I do want to check something. Where does it trade to in this range? So why can we buy here but not down here? Well, this is the London kill zone. Therefore, we are permitted to buy or sell. And this is also where setups occur, so it makes sense that we want to be buying as soon as it enters down into this fair value gap. Where would your stop loss be, Sean? Well, this is here's the thing. ICT does say to put it at the bottom of this low, but you can see that this wicks down all the way down to here. But let me just mark this out. Bullish or be open. Oh. And it's just interesting to me how this price action here is stacked from here to here. So could you argue that this is like a balanced range maybe? I don't know, but I'm gonna make that black. To be fair though, let's say you did get stopped out here, there's another entry right here when we trade back above this high here, and we have a breaking market structure here. So let's just zoom in on this part, this little piece of price action. And remember, this is buy side liquidity. I'm going to make buy side liquidity too. This will give a break of structure, change in the state of delivery. So you can see this is also in a fair value gap, so we'd want to be buying from there. This is the optimal entry. Also, we've taken out a swing high here. That's this taking off the swing high is important. It almost confirms our expansion higher. Whenever I put our dashed red line, that means 50% off. So this is the 50% off this fair value gap, and you see we trade right to it, and then what happens? We leave. Also look at how this wick trades down back into this order block. This here can be an entry in itself. I have seen ICT do similar things, because this is actually an order block, right? Which means we want to see the 50% of it get respected. So it's interesting to watch how the wick trades lower into the digs into that 50% level. And then we have a breakaway cap by lots of things. Well, we run higher in general. Then you could say, okay, well, if that's the case, where do you want your stops to be taken? Well, we can measure this range. This is what you call measured. And we have here and then here. So let's say we take off 50% here. Then you can see a fair value gap gets created, and you can see our prices consolidates right into the New York session until we break through it, and then we leave it completely. I always make it a goal of mine now to mark out the range that is created between the end of London kill zones open and the start of New York kill zone. This here, we have breaking market structure here. And then we have sell side liquidity here. This does take out that sell side liquidity, but we have relatively equal lows. So what I'm going to do is I'm going to mark this out as sell side. And you can see how we attack that with a beautiful, beautiful entry here. And we have a breakaway gap just above that. How is this breakaway gap? It gets left open, and this is the move that breaks the structure, remember? So we anticipate that to be left open. I've marked this out because you can see it's an inverted fair value gap. And look how price respects it here, here, and here. Also, this is a breaker. Why? Swing high, and this is the swing low in between. And you can see we trade into it here. To the 50% off it, to be precise. And then if let's say we miss this entry here, and to be honest, sitting through all this consolidation wouldn't be the nicest. But it's interesting to see how we actually consolidate between this range here. Anyway, we have another break in market structure here. As soon as this closes, price shouldn't trade back above it. Why? Significant swing low. And it's got two short-term lows to the left and right of it here and here, making this an intermediate swing low, which gets broken, therefore making it a break in market structure. And then we have an entry on this fair value gap. And then this one acts as a breakaway. And we do actually trade back into it, but I believe we traded the breaker. Yeah, but we'll look at that in a bit. Where would my target be ultimately? Well, thinking about it, actually, I never even thought, where would I be getting out? Excuse me. These are all selling points. Probably at this order block. And remember, guys, this is Monday, and I don't suggest trading Mondays, so it is interesting to see how we trade it down here. So where's the breaker? So well, we got swing high, and there's a swing low in between, which would be here. Drag that out, and you can see our price acts around that level. Trade into it, trade away from it, then we trade through it. Right, remember this is the central bank dealer's range. Trade above it, trade to the bottom of it. Look how price respects it. You can't make this up. Then we break structure, trade one more time lower, respecting this fair value gap, and then pushing higher into the new day. This here, this is all just time dilution and consolidation. You could argue this is what you call a balanced price range, from this low to this high. As you can see, our price touches it and leaves it. So where is it balanced? To here. And why do I say it's balanced? Because we've got all this back and forth action, up and then down, and then up and then down, then up and down, then up, right through. And then once it gets to here, I'd say that this area is now balanced. So any dip lower should find support, and that's what we see. And you can see a whole breaking market structure here with a fair value gap and a order block here that gets created, and another fair value gap. So it goes up in levels, there's stages. I'm gonna mark out this fair value gap specifically. Actually, yeah, this, and then there we go. And you notice that all this is happening above the 50% level of this range, or at it even. So price shouldn't come back lower below this. Since it's balanced price range, this should act as support, and we find support here, and then one more time here, and then we head on to Tuesday. So yeah, let's get straight into it. And what I do is I mark at the high and low of the Asia range, 8 p.m. to excuse me, very tired. I am gonna go to sleep, I think, after this section, but we'll get this is going to be probably a 2-part series because we have a lot of price action. This day looks absolutely disgusting. I don't even know if I want to annotate it, in all fairness. I don't know, it looks disgusting because look at this, just back and forth price action, you know. This is not a good day's trade. I'm not even going to annotate this purely because this is just bad price action. It's important that we can recognize that it's bad price action, but god damn. I'll mark out the Monday opening. You'll see we touch that and then we find support and continue consolidating the whole day. I mean, you could argue you could trade this, but this isn't even very okay. We are going to take a look at it. We'll take a look at it. Right, so I'm going to get the dividers in real quick and I'll be right back. And then we're on Tuesday. Right, so I am going to bring this video to an end, but I am going to continue on. So this is going to be part 1, and then the next one will be part 2. Thanks for watching, guys. This has been GBP Baby, and I'll catch you in the next one. Peace.